Okay, so in this video, we're going to talk about extension because this is something that happens, as we can see here, over the last year's worth of trading sessions, 98% of the time. So this is really important because if we ever have a day like we had on Tuesday where we stayed inside the balance area the entire session, like you can see here, we know that there is a 98% chance that we will have extension. And because this is a futures market, the likelihood of that happening during the Globex session is extremely high simply because it's open during the overnight hours. So there's a couple of things that I want to show you that you can do that you can also apply this during the regular trading hours. Now, because all of you probably trade different markets, everything that I show you in these videos, the same concepts apply to those markets. So if you use this on stocks or if you use it on Forex or Bitcoin, it doesn't really matter what it is because all of these strategies apply. And the reason why they do is because this is market behavior in correspondence with this specific tool. So we've already talked about using the retracement tool inside of the balance area, okay? And there's a lot of really nice trades in here. So what about extension? What do we do with extension? Well, we can use something called Fibonacci extensions. And so what this will do is this will give us realistic targets and entries for instances where we break above that. And the way that this works is what we want to do is we want to select it here, and then we want to go from the low to the high. Okay, and then I want to put this out so that we can see, since this has already happened, I want to see where is that going to take place. So remember, in most cases, we're going to have that initial fake. Now, that doesn't happen every single time. Sometimes when we approach the higher price of this balance area, we can blow right through that. Conversely, with the low as well, if we're dropping, then that can happen as well. But we always want to be aware of an initial fake. And the reason why this happens is because you have to realize that when we move beyond the balance area, especially during the regular trading hours, a lot of what's driving that is institutional buyers. And if we're dropping, it's institutional sellers. So there's a lot of money at play here. And so what happens is you'll have an initial push only to see the market pull back into the balance area. And a lot of retail traders, they're holding their positions really tight. And so there's a lot of stops being run. And those of you that are new, all that means is that the market's being pushed around, and those traders that are amateurs are getting their stops hit, their stop losses hit, and so they're losing these trades. And that's why we want to be careful of this, because it happens over and over and over again. Now, overnight session, a little bit different story, but the same principle applies. So what we can see here is when we broke beyond the high of the balance area, we had a pullback. Now, we didn't have a strong pullback into this area. It actually took about 3 hours from this break right here. We blew through the 23.6% and we hit the 38. And you can see here, it's price is using these levels here. Okay, so what we want to do is the trend is your friend. And so once we have broken above that, we are looking to get long. Okay, so again, being cautious of that fake, pulling back into the balance area. And so we want to be in that direction. Okay, so as long as we're not having lows broken. So what I like to do, just to give you some tangibility, I like to look at lows. Okay, so in other words, we have a low here, we have a low here, we have a low here, we have these lows set. And so if we're really going to head down, then we're going to break these lows. And it sounds obvious, but remember, we got to keep things simple. There's no reason to complicate the market. Some of the easiest strategies to implement with real money is to just look at the simplicity of movement like that. So if I'm going to go short into the balance area, What tells me to hold on to that position is if these lows here are being broken. If they're not being broken and we start heading back up, the likelihood of us extending into this extension area is extremely high. And I already know statistically down here what the probability is. So you want to be cautious of that. So you want to look for breakouts, you want to look for swing highs and things like that. Okay, so we have a nice strong push. We can use these as targets. We can also use them to re-enter on pullbacks. So, if we pull back to here, which didn't happen, but we did have a pullback to here, we can get long on this, and we can use these other areas as targets. So some really nice trades in here, even though this is Globex, the same thing applies. So let me show you that. What we'll do is we'll look at Wednesday's session because we had extension during the RTH. So if we just come through here, we can see if we use our little tools here. Let's go to the retracements first, and we want to look at, so since we had from high to low, since we had a drop this day, we want to draw it from the high to low to see where these areas are. So we had some actually really nice trades within here that we can use to get long on our way back up here. And we use the same principle, okay? So if we're gonna be dropping, these lows here, they have to be broken. And since they're not being broken, we can consistently have higher lows. We can buy these prices as the market's pulling back. See that? It hits it, pulls back, hits it, pulls back. So we can use those as entries. It's small. Wednesday's movement was kind of pathetic. It was very slow. The volume was terrible, but still extremely profitable trades. Okay, so let's look at extension. Let me get rid of this so we don't have too many lines on here. So if we look at extension, so again, we want to, since we're coming up, we want to go from the low to the high, and I want to have this, well actually let's put this right here because this was the regular trading hours. So we want to look at these levels as potential resistance. Remember, we watched the fake, which happened, and we didn't have like huge pullbacks, and that's just what happened. Sometimes we do, sometimes we don't. If we're looking at price coming down in here, we can put those retracements back in there. So we can go like this. So we go from low to high this time to find support, right? Because in order for this to come down, that would be 100% retracement, right? So we have this 23%, which is all it really hit. We never got to the 38. Okay, so if we're looking for, so we've got our extensions up here. These are upside targets if we're long, and then we can also test them for short, right? And then on the downside, on the flip side, as markets trading back into balance, we can use these levels to buy. Okay, so it hit here, we can buy that, we can short this. This is, within a tick. It got one tick below it. We had the initial fake, so it came up, dropped back in. We hit this resistance, it came back, it tested the high of the balance area, came back up. Again, not the best market movement, but extremely accurate using these tools. Okay, and then the rest is pretty much history, and we have way beyond extension into the Globex session. So anyways, keep it simple, extremely profitable. If you just keep it that simple, there's not a lot of complication here. These revealed exactly where to get in, where to get out in advance of market movement, and what set us up for all that was this trade balance movement. And then the last comment I'll make on this, since we've talked about this the last couple days, we can see here we had our lows that were set, we had a nice break, and then we had this short testing this as resistance. And so that was a nice little trade. So regardless of what market you use this on, futures, forex, stocks, etc., all of these principles that we've talked about, these strategies, are identical on any of those markets. So what's great about that is if you want to diversify, you don't need to change anything drastically. We're still doing the exact same thing on anything that you trade. Now, if you're new to futures or just starting out, what I would suggest is maybe start with the micros. Far less capital required up front. Yes, smaller profits initially, but also smaller losses. So as you're figuring things out, you don't have to risk so much. So anyways, that's wrap, and we'll continue this with additional strategies in the next video.